We talk about Tom Lee here. I know you guys have mixed opinions about Tom Lee, and that's totally fine. But this next story here, Tom Lee identifies four catalysts that could end the historic AI semiconductor rally. So I know he's often viewed as a perma bull. It's interesting to me when people viewed as bulls or bears produce some type of thesis or ideas for the opposite direction. I generally take note of that. Wall Street bull Tom Lee is sounding the alarm on the historic AI semiconductor rally, warning that an abrupt change in market conditions is looming. With four distinct catalysts threatening to drain the equity liquidity later this year, Lee is questioning what happens when the market's speculative firepower finally gets exhausted. Appearing on Pomp's podcast, Lee stated that these are the four major catalysts that could trigger a significant market pullback. The first one is the Fed's structural shakeup. Markets will inevitably test the Federal Reserve as it completely redoes its inflation framework using 5 new task forces. The second is the mega IPO liquidity drain. Massive equity unlocks from SpaceX, coupled with the upcoming IPOs of OpenAI and Anthropic, will absorb billions in capital. We've talked about this seemingly every day in the lead up to SpaceX. The third catalyst is the coming shortages. Persistent supply chain disruptions in the Strait of Hormuz are setting dangerous macroeconomic preconditions. And if that continues, we could see more downside from that. And then the last one here is the speculative firepower running out. A severe correction will hit when margin debt reaches historic extremes and investors begin moving massive amounts of cash to the sidelines. Now, we don't see that yet, but that's something to watch. The current AI-driven semiconductor rally has officially eclipsed the scale of the 1999 dot-com bubble, prompting concerns over a sharp K-shaped divergence in the broader market. While blockbuster tech earnings have delivered what analysts describe as, quote, video game numbers, end quote, the rest of the market is fracturing. Lee's cautious that this parabolic run faces a hard ceiling once the fourth catalyst hits, when speculative firepower runs out and margin debt levels hit historically associated with short-term corrections. Beyond international market mechanics, major macroeconomic and geopolitical pressures are mounting against the bulls. The Federal Reserve's decision to launch 5 task forces to rethink its framework introduced a level of structural uncertainty that the markets despise. Simultaneously, global supply chains remain under severe pressure. Ongoing disruptions in the Strait of Hormuz threaten to trigger severe coming shortages that Lee views as a primary precondition for a broader market reset. The final pressure point stems from the massive liquidity drain within the technology sector itself. The SpaceX IPO, which launched with a highly restricted float, is scheduled to unlock substantial shares in phases later this year. Remember, the first one is coming at earnings, which is going to be in early August. And if it remains above that key 175 level, an additional 10% will be unlocked around that earnings date.